Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the 9 EMA with Fibonacci retracement workshop. I'm going to run through, and I'm going to show you how to trade the 9 EMA, and then we're going to talk about how to use Fibonacci retracements to improve your trade locations. Been an interesting day on Wall Street, real choppy, but right now we're looking to break positive. Traded a lot of gold futures today, and right now we're printing, 32.26.8. It's been a challenging day to trade gold futures just because of really the absolute chaos. We were down during the overnight, and then we rallied back. Like I always say, I'd much rather lose my money to the long side of gold, but I got caught up in a bad short today and actually ended up sort of just trying to fight back to break even at this juncture. But definitely an interesting stat. I would say the stats are interesting. Taking a lot of trades today, though, and the reason why is because all the key numbers keep coming into play. So, Jonathan Ross, is this live right now? You got it, Jonathan. This is me. Ask anything you'd like. You're more than welcome to join us here, and definitely ask me anything you want. We're going to run through a 9 EMA, RSI, Fibonacci retracement workshop. I'm going to show you the approach. The Fibonacci retracements are my bread and butter. That's what I do. That's how I trade. That's how I like to try to get in and grab a little market share each and every day. And I find that if you can find a discipline and a strategy, then you can do it. So I'm going to start real basic here today, and then we're going to run through how to place a few trades, where to put your stop losses, but more importantly, how to improve your entry with the 9 EMA strategy. So, yep, we're live, Jonathan. You ask me anything you like, and I'll do my best to answer questions. If it's a functional question, then I'm probably going to have to wait a little bit until I get through the point right here. Let me see. Joshua Chung, hello there. Hurst Horns, the 15-minute orb strategy worked great on the NAS. Yeah, I was looking at the 30-minute orbs. They worked well as well, but really you caught pretty much the whole break if you got a 15-minute orb, and then orb's a different strategy. We'll be sure to work through another one of those workshops. It was very well received and very popular. All right, Bobby Bob, good to see you, Bobby. All right, everybody, let's go ahead and just get cracking on this workshop. I want to not drag out too long because you guys tuned in to see a workshop, so let's go through it. This is the 9 EMA trading strategy. Now, you can find all of these at our YouTube channel at How to Trade. If some of you are watching the live stream right there we are. That's not it, but our live stream should be right in here somewhere as well. So if you're interested, yep, there I am. So if you're interested in watching these things live, we do a lot of live streams. We're doing about 4 a week. We probably will be doing more, and we also work with our partner, Switch Markets, which we're just starting to launch that YouTube channel and do live streams there. So, if you want a strategy here, you're just going to go to videos, and we've got a lot of videos here for you, and they're all pretty much strategy. We got some on compound trading. We've got some right here, 5/8/13 EMA. And I'm sorry, I'm watching gold futures out of the corner of my eye, and there was the move we were looking for up to 32.25. That was easy. God, that was easy. But 5/13, something like that, ICT kill zones. We've done a lot of these videos. I'll even use AI to code some of these strategies. But for today, we're going to go ahead and look at the 9 EMA. Now, the 9 EMA, real basic strategy. Dave, good to see you, Dave. Real basic strategy, and it's one of our most well-received. People love this strategy. A lot of the more advanced traders love to hate me. They'll give me a lot of really, just critiques on the strategy. And what I always say, guys, is you've got to know when to hold them, and you've got to know when to fold them. You have to understand that when it comes to trading any strategy, you have to know when to trade it. So the 9 EMA trading strategy, we're going to be focused on active markets. Now, we're also going to incorporate a couple other things to really sway things in our favor. Now, what we're going to look at here today is I'm going to get you set up on the 9 EMA on TradingView. Then we're going to do some trade executions, and then we're going to talk Fibonacci entries. Fibonacci entries are sort of a different video that we made. I'm going to show you that one in a second, but you can see this is the basic concept. You're looking to get this thing into overbought territory. You're looking to sell, or oversold territory you're looking to buy, and you want the bar to break above or below the EMA. Now, one of the ways that we can do that is we add relative strength index. I'm going to do that for you as well. But also, we're going to incorporate Fibonacci retracements. And the reason why we're going to incorporate Fibonacci retracements is we want to get in there, and we want to make sure that we get premium market entry, premium trade location. Trade location's everything in this game. If you don't, there's nothing wrong with buying high as long as the market goes higher, but you need to have good ideas of where to get into the market. We're going to use 3 tools for that. We're going to use our 9 EMA. That's going to be our trigger. That's going to give us the trading signals. We're going to have RSI. That's going to tell us when we need to be trading or looking to the long or the short. And then we're going to look at Fibonacci retracements. We're going to attack the current market structure with our retracements. It's very easy to do. I'm going to show you how. And then we're going to go ahead and we're going to step up to the plate and say, okay, what do we want to get accomplished? We want to switch risk versus reward in our favor. We're going to approach the market in a structured fashion. We're going to do our best to see if we can put some money on the board today. So that's the plan. And just remember that you always improve your entries with Fibbies. Now, the problem that we run into is we don't want to be disciplined. We don't want to be disciplined. We don't want to wait. You got to wait. They pay us to wait. Even though I said I took a lot of trades today, there was a lot of time in between the trades. This wasn't rapid fire over trading. So you've got to be able to wait for the setup to come your way. And if enough setups come your way, you're going to make money. So let me see right here. Let's see. Hurst, yeah, I learned the orb from your video. Thanks. Absolutely. You're welcome. Jonathan Ross, any recommendation on how you stick with confidence on one-to-one risk versus reward would be nice. That's relatively straightforward. I'm going to set that up for you right now. One-to-one means, hey, as long as I'm over 50%, I'm killing it. So, yeah, there you go, Jonathan. I discovered your channel when I switched to one-to-one risk versus reward scalping, and the results are awesome. Yeah, you win a lot. You win a lot of trades. And always remember with one-to-one, you're going to get everybody in the industry is going to yell at you, and they're going to say, it can't be done. It can't be done. Just remember, one-to-one risk versus reward. You make 51% of your trades profitable, you win. That's it. Now, typically, I like to shoot for 52.5 to cover commissions and slippage and things, but we're looking to hit 60, 70, 75% of our trades. If we can do that with a one-to-one, you have a 25% edge over the market. I will argue till the end of time with every professional trader out there that that's not the best way to do it. But they like 1-2, 1-3s, and 1-4s. And to be brutally honest with you, I wish I had about a 1-5 on right now in my gold trade. Man, I should have just done that one for you live. But right there, this was sort of the gold futures trade. Bought in, played a break over 32.25, which was really the top of the market, and got a nice, $6 run. That's 60 ticks at $10 a tick. That's fantastic. That's fantastic stuff. So love the 30-minute orb. Marissa Bonato, I'm watching from Libya. Well, welcome. You're always welcome here. Hey, Mew, good morning, good afternoon, good evening, wherever you may be. Okay, guys, let's go ahead and set up let's set up our chart first, and let's get on over to the YM, and then we'll talk gold here in just a second. Okay, this is the E-mini Dow futures. Really a big up day, and we've got a situation sort of brewing right now. Okay. Number one thing you're going to do on TradingView is you're going to click on indicators. You're going to go down to moving averages. Click exponential. You're going to click on exponential. It's going to add one to your chart. Okay, what are you going to do here then? You're going to go to settings, and you're going to go ahead and determine your length, which is going to be 9. We're going to base it on the close of the price bar. That's what we want. We're not worrying about smoothing. We're not worrying about anything. We want to know where the source is and the length. The length is 9. The source is the close. What's the source? The source is just a price point. That's all that it is. So you're going to go ahead and do that. And you can see right there, okay, we've got it added to our chart. The other indicator that we're going to use, let's get rid of that one. The other indicator that we're going to use to establish confirmation is the relative strength index. So you're going to go to indicators. You're going to go down to the relative strength index, something like this. And you're going to go ahead and give it a click. Okay, you'll notice that once you do click, it's going to add it as a window at the bottom of the screen. Let's take just a quick look at our settings. Now, for me, the RSI, I leave what's called the factory settings down. What I want is that RSI length to be 14 and the source to be a close. I'm not worried about any of the rest of this stuff either. I'm going to go ahead and go OK. Okay, now we're set up. We've got our RSI under here. We've got our EMA right here, our 9 EMA. Now, our RSI, when we get above 70, we're going to look to sell. When it gets below 30, we're going to look to buy. That easy. That easy. There's nothing else to it. So right here, if we're looking at the E-mini Dow futures, you've got a 5-minute chart working. We are in overbought territory, so we're going to look to sell. Now, one of the biggest problems that we have with this stuff is that sometimes when we get our entry point, which would just be a bar close beneath the 9 EMA and then a pullback, a lot of times if we go on that first entry point, we're immediately taking heat on the trade. And I'm not real big on that. So let's go down to our 1-minute chart. Okay, right here. This is going to set up to be a fantastic example of how to use our Fibonacci retracements to help. Now, remember with Fibonacci retracements, let's blow this way up so you can see. Oversold territory, or overbought territory, excuse me, you're going to sell. This would have been our original entry, according to the strategy. It would have been the first bar close underneath the 9 EMA. Would it have worked right there? It would have worked like a charm. Now, when you're using this strategy, you have to say, okay, do I want to always be aggressive here and try to get these moves? Or do I want to be patient and maybe try to flip risk versus reward in our favor? This is a great example of how we're sort of paying a price for being patient. We missed the break. Now, if you use this strategy, you're going to miss breaks. You can't worry about it. You can't worry about it. You're going to miss these types of breaks, but it'll pay for itself by just waiting for a much better entry point. So this would have been our original entry. Now you can see the price, the break's already gone. I wouldn't even consider using my Fibonacci retracements here to get in on the trade. Wouldn't do it. The move's gone. It's over. We missed it. Let's go back to gold, though. Okay, gold's interesting. 5-minute chart. What do you got there? Over bought territory, so we're on a sell. Let's go to a 1 minute and see how this works. Okay, the 1 minute giving us something real similar to what we just saw in the YM. Okay, now our original entry right here is going to be the first bar close underneath the 9 EMA. Why? Because we're in overbought territory and I'm looking to sell. Always remember to build your trade. Every trade has 3 parts. This trade right here, you got a stop loss, which is going to be right up above that swing high. You've got an entry point, which is probably going to be down in here somewhere, all right? And then you've got a profit target. Now, we don't know our entry point right yet because we're going to have to wait. We're going to have to wait for this to set up, and really we want to get our Fibonacci's alive and kicking here. Definitely want to do that. But are we going to get the trade? You can see right there, gold went down. Now it bounced up. You can see we're sort of in a bit of a pickle here. We got to sort of wait. We got to wait for that bar to close beneath the 9 EMA. And when it does close beneath the 9 EMA, then we'll get our entry. Do we have an entry yet? No, we do not. We do not have an entry, so we're going to have to wait at least another minute. The idea behind doing it this way is to flip the risk versus reward in your favor. That's what you want to do. So sometimes if you're trading a 1-to-1, you're going to say, okay, my stop loss is going to be up here. What am I going to need? Well, you're going to have to hit down in here somewhere. What are the odds of price just breaking down to your profit target after your entry point? They're not perfect. The most important part of this aspect of the 9 EMA strategy is to know where your stop loss is. Your stop loss is always going to be a pronounced swing high, above a swing high or beneath a swing low. I highly recommend picking out a pronounced one that's well-defined. If you can do that, you're going to be okay. Okay, here comes the entry point. Now, once this bar closes, we know we had it in overbought territory. We're looking to sell the market. We want to get the bar close. Okay, where are we at? Okay, there's the bar close. There's the original entry. Now the question really becomes, is that the absolute best place to sell this? Or if I'm patient, can I build a bit of a better trade? And this is how we would do it. We run our Fibonacci retracements right here, and we're just going to go ahead and wait. We're going to wait for a swing low to set up, and then we're going to go ahead and sell one of our levels. And as you can see, this is setting up pretty good. I won't say 9 times out of 10, but I'll say 5 times out of 10, this right here typically rotates against you. 25 seconds left. Let's see. Okay. Now, where's our entry going to be? Let's go ahead and fire up the trading panel, wherever that may be. Always paper dollars. We'll do live trading, but I use a different broker for that, and you'll know when we got the white screen over here. Okay, what are we doing? We're still waiting for our pullback. We want our pullback, and we want our pullback sell. Now, as long as that swing low's in play, I'm going to have a chance to sell 38% up here, which is right around 329, something like that. So let's go to the order. Let's go to a sell. This is going to be a limit order, and I'm going to go ahead and I'm going to want it right in front of that level. Now, is 38 the best place to put this? Maybe. As long as this swing low holds, we can attack from 38%. Now, the idea here is real simple. You want to save the money. Okay, let's go ahead and just put that in the queue. We're selling limit. It's going to be a limit order. Okay. What we're looking to do is we're looking to save money from our original entry to our new entry, our Fibonacci entry, and then still have our stop loss up here. Now, what that does is that completely changes everything we've got going with our risk versus reward. In this instance, if we do get our entry, it's going to be right around there. 3228.9 would have been our original entry. This one would have been 3229.7. So we would be saving some money. Be saving what, about 8 ticks, something like that, 10 ticks? Okay. Now that's if I want to trade 38%. I highly recommend that in sort of a trending market. We're fighting a trend here though. This is a counter trend trade. Gold today's up about or 1.25%. So let's just say, what if I wanted to do something like this and play the back end of that golden zone? Is that doable? Of course it's doable. If we're patient and the market comes our way, then look how much money we save. Now, it's not coming our way. In my view, this trade is still valid. We're still looking at the short side of the market, but if we get some blowback, we can save the money from that entry point right there to right up here at our 62%. Now, the very first thing you're going to say to me is, Shane, you're going to miss a lot of trades that way. And I'm going to say, yeah, I am. But let's take a look at where our profit target would be. Okay, if we were just going with just a straight 1-to-1, which is what I recommend in the video, that would have been your entry point right there. You'd have been looking at 32.28.8. Your stop out point would have been 32.9. So what is that? About $4, 4.8. So if you're going to go 4.8 from 32.28, you're going to have to get down there to 32.24, something like that. That's your profit target. That's your 1-to-1 basic. All right. Now, what happens if we hold out and we get our entry up here? Remember, we always work from the swing low. That's how we draw Fibonacci's. You can just adjust your swing lows down. Big thing is anchor into the top of your wave. Now what do I got? Well, let's say I get in at 32.30.8, 32.32. That's my out. It's a much sharper trade. It's about a $2 risk, but I'm still looking to get what? That original 4, plus I'm looking to get another 2. So you just built a 1-to-3 trade. What's the biggest problem with it? The biggest problem is being patient and getting your entries. Believe me, guys, I've been there. I've been doing this a long time, and I've been doing this a lot over the last, I started trading last night when I saw the action in the gold market. A lot of folks will sit there and they'll say, Shane, that's great. I just built a 1-to-3 trade. The probabilities are in my favor that I'm going to get a move. I don't have to win nearly as many of them, and I won't. But I'm now making those conventional 1-to-3s, 1-to-4 trades. I've got a system. I've got a firm entry. We're in pretty good shape. And always remember to adjust your orders to reflect. So we want to get in and we want to get short right in there. So that would be our entry. So now the market's starting to bounce back. Okay, bounce back. Now a lot of folks would say, well, Shane, I want to get long as soon as I get this bar close. And I'd say, well, you can, but you're nowhere near where you need to be on your RSI. If we were way down in here and then we had a rebound back above the 9 EMA, I'd say, shoot, do it. What do you got right here? In my view, this wave right here is still valid. It's going to let us get in on the trend, the downtrend, which is developed here on a 1-minute chart. Now, is the 1 minute a great time frame? It's not the best. I've been trading 1 minutes all day. I can tell you that the 1-minute chart is going to set you up for a lot of challenges. Your risks are going to be a lot lower, but you're going to be taking a lot more trades. Okay, the market's coming our way now. Now let's see if we can get filled up here and see if we can actually get our position short so we can manage this thing in real time. That's really what this is all about. I can sit here and talk all day and line these trades and build them. Doesn't do us much good. We need to see the market moving. So what do we have? Market's sort of stagnating right around that 32.30 area, 32.29.6. We need 32.35. So we're right on the doorstep there, about 10 ticks, and now the market's starting to come off again. It's a waiting game. They pay us to wait. They don't pay us to trade. Let's give this one another minute or two to set up. And I've got a lot of folks here. I got a lot of folks way behind on the live chat. Let me see. A base hit's not home runs. Yeah, absolutely right, Hurst. This would be a way that you would try to build home runs. You would try to build 1-to-4s. Let me see. Micros make it easy. Absolutely. You hit the micro contracts, and you got it. Let me see. Henry. Good to see you. Henry watching from Malawi. All right. Always a pleasure. Keep it simple, Hurst Horns. Keep it simple. Keep it simple is the best thing possible. Why not move your stop loss to no risk ASAP? Steve MC, good question. Why not do that? You can do it, but the real question becomes, how many times am I getting stopped out at break even, and how many losses am I taking? Now, here's one of the problems that you're going to have with that idea of moving to break even. And you're not wrong. We're trying to preserve capital and build the ratio and do all those things. Okay, that's great. Remember, X amount of these trades, a certain percentage of these trades are just going to be miserable losers. It's just the way it's going to be. So the real question is, if you're moving to break even, what percentage of your trades come back, hit you at break even before they paid you off? I bought 32.25s today in gold futures. I bought right here. Right there, bang. I'm long. Take a draw, got a rally. Now, right as soon as I go positive, I mean, this looked like an abject loser at first. I would have got break-evened. I would have got break-evened again before I got the big move. So if that's your personality and you want to be a break-even trader that just wants to insulate as many trades and positions as possible, then you do it. I can't live with myself moving to break-even anymore. I can't do it. I put the trades down, I build them, I throw them down, and when we throw down, we throw down. That's it. I don't want to second guess myself. I want to keep it as simple as possible. On this gold trade today, I left the room. I went in there and got some egg whites going and some oatmeal. I said, poured myself another cup of coffee because I knew by being there, the only thing I could do is mess it up. And one of the things that's messed me up over the years badly is moving stop losses to break even. I don't believe in it. But if you got to do it, you got to do it. If you want to insulate that money as much as you can, do it. Just be consistent. Don't move some trades to break even and not others, because then you're going to run into trouble. All right, right there, that's sort of too bad. We were looking to get that entry point right at that 50% level and get back in on this downward, really this downward push. I don't know that we're going to get it just yet. But even from 50%, you cut your stop loss. I mean, look at where your entry is. Bang, your original entry's there, 32.28. Your new entry's at 32. You save 20 ticks on that entry. That's not too bad. Let me see, Jonathan Ross. That fair value gap between 50 and 61 looks sweet. Well, see how it goes. Let me see. What do you mean? See, 15-minute orb worked great. Sure did. All right, guys. Let me see. I'm just way behind on the live chat. Good to see you, Tuku. Welcome. So this would really be the situation. You're looking to get in on these levels and skew it. I think everybody's got that concept now. So let's go see if we can build one. Could we do this? Could we do something like this? Okay. You're in overbought territory, so you're looking to sell. That would have been the sell right there. And now you're pulling back. Can we still work the Fibonacci's from here? You could do it. That would be your sequence. Keep it very simple, drawing Fibonacci's. Swing highs, clear-cut swing highs, clear-cut swing lows. If you can't tell, then don't do it. So could you do this? Theoretically, you could take this trade. You could go right there, the short. Maybe 78% is the one you want. Your stop loss is the most important thing. It'd be right up there. What would you need to do really to get this to work for you? You'd need to figure out where you need the market to go. That would have been your original entry right there. Really hard to take this trade, especially after you've got the big runoff, but maybe something down in here. Something down in here maybe. Maybe you're just going to shoot for this. Now, if you want to shoot for something like that, maybe 43 even. I mean, I don't object to it. I'd say, okay, you can do what you want. The real question is it going to work? I mean, we could sell right now. I don't have a problem with that. Okay, so we sell. What did we just sell? We've got a macro wave right there. Let's see if we can get a little better look at this. You've got a macro wave and a move. Okay, there's your break. RSI was oversold or overbought. We missed the first move. Now we're trying to get in again. The only thing that saves this trade and this methodology is, number one, we went short from right around our 62% level, which is fine. There's nothing wrong with that. I love the back end of the golden zone. 62% is one of my favorites. Where's my stop loss at? If that's my entry, my stop's right up there. Where can I build a profit target? Think on your feet. Be dynamic. Think. Where is it worth it for me to shoot for this bottom of market structure down here? Well, if my entry point right there is at 42.335, and I'm looking to get out up there at 42.369, that's a 34 points. That's my stop loss. Excuse me. What's this down here? 42.294. Is that a good enough trade? It's a 1-to-1. If you took that trade right there, you were going to need to get a bit more. I mean, the entry point's roughly the same, but you see what I'm getting at. Maybe you want to shoot for pure market structure. Do something like that. This order block right down in here. Could do that. So basically what this strategy does is it uses the RSI to identify when you should trade. It uses the 9 EMA to be your trigger to get you into the market, and it also examines price action. Now, personally, I wouldn't be doing this. I think it's a bad idea because you've already sort of got your 1-to-1 break, and to come back in now, I think you're going to run into trouble. But, you know, I could think that all day long, and we're still making money here. So if I was going to shoot for that conventional 1-to-1, I could shoot for it down there. Where things get very lucrative for us is if we look to maybe get in on a 1-to-2 or a 1-to-3, something like that. It's really all there is to it. It's not that hard. Look at that 340. Look at the market crashing for us. If you're going to trade EMAs, you've got to probably stick with them. You got to stick to your guns. You need to get your stop loss location down. You need to know what your profit target is. And then you need to start managing these trades with the idea that you're going to capture that momentum. This right here, I mean, this is coming to us beautifully. Where should we get out, though? It's hard, isn't it? This is hard. You're up 420 right now. You're waiting for a big move. You're kind of getting it. Do you take the money? Do you take the 450? Or do you say, no, this market here, I like the downside. I love rotation today and the Dow. I think we're going to trade down maybe to these lows that we saw back about a half hour ago. You can do that. There's nothing wrong with that. Just make sure that your risk versus rewards line up, and they need to be at least a 1-to-1. In this case, if we were serious about doing this over the long term, we got to hit down in there. We've got to hit 42.294, maybe 42. Maybe 42.3 even, something like that. That's what we have to hit, or else we're always going to lose more than we win, and that makes us a net loser over time. Let me see. Go real. Good to see you. Let me see. I use the 9 EMA EMA 9 yellow white lines. There's nothing wrong with that. You can use whatever color you want. I use red. Red keeps my attention. That's for sure. Bank it. Bank the money? Nah, let's let this one blow up in our face. We're locked in. We've already got our stop loss. We know what we need. We need a little bit of heat there. It's demo dollars. Let's let it roll, see what happens. All right, let's look for another trade here. This right here got away from us. We didn't get it. We didn't get the gold trade. Now we've traded back down towards that 3.25, 32.25 level. Didn't get the pullback. You're going to get a lot of this when you use the Fibonacci's. You're going to get a lot of this. All right, let's do a few other things here. Let's find something we could trade right now. Let me see. Anything going on in WTI crude? Not really. Very, very dead. It's just dead today. Dead today. The big move was during the overnight. Let's go to a Euro USD. Let's see if we can get something going. Let's take this down to a 5-minute chart and see where we're at. Sort of a flat line. Let's back this up to maybe a 30-minute. Progression's simple when you're scanning for trades. You're looking at your RSI first to see if the market's out of whack, above 70 or below 30. Then you're looking to see where the pricing bars are with respect to the 9 EMA. And then you're looking to pull the trigger. And then if you're using Fibonacci's, you wait. Let's take a look at Euro FX futures. 1-minute chart. Not quite in oversold territory, so you're not going to be able to get that. Let's take a look at the Great Britain Pound USD, a Forex pair. Flat as a pancake. Flat as a pancake. Oversold there. You probably would have already been short from that zone. I recommend if you get a big move coming out of either overbought or oversold, you just fold it. You don't necessarily look to do this too far down the road. Let's look at gold. Nah, we already looked at gold. Let's look at silver. 1 minute chart for silver. Let's go 5 minutes. There's nothing there. You can already tell, but okay, this would have been a situation where the really trying to improve your trade location would have helped you. You can see right here, overbought territory you're looking to sell. Something right down in there. That would have been your original entry. Now, the beauty of this is you know where your stop loss is. It's going to be right above there. Like I said, I mean, with your high right there, 32, 55, 65, you definitely don't want to be one tick above. You got to put it up there a little bit so you can withstand stuff like this. This happens a lot. So where could you, if you used your Fibonacci's, where could you have entered this trade at? 38, 62, or 78. And you had to cut your risk versus reward. You know, you would have definitely swung it in your favor. So look at the NASDAQ. That's always pretty good. What's that YM doing? Well, YM's coming our way. We've almost hit our profit target here. It's toughest part's holding these trades. Let me see, Jonathan Ross, Shane, do you have any specific trading hours or do you trade any time of the day? I like to trade when the market's moving. So I typically focus on the U.S. session, but typically the early portion of it. But we live in strange times and the markets are staying liquid and active all the time. Gold was going crazy last night. Gold and crude oil were both trending. So you had to sort of say, well, do I want to trade right now or do I want to wait for tomorrow? If I wait, I might miss out. FOMO is very real. But typically I like to focus on the liquid deep hours, Jonathan. Let me see, Steve NC, Ben of Ben and Jerry's was just arrested. Well, the things he was saying wasn't very good, Steve. He was being pretty crazy toward RFK Jr. All right, there it is. So we just hit our profit target. Let's go ahead and flatten it, and we're out. So we made a little bit of money on that trade. And it was a pretty good trade. It wasn't the best example of what I was looking for, but still we walked out with 500, and you can't beat that. That's not a bad thing to do if you can do it consistently. Let me see. It's not like you can go to YouTube and find people teaching advanced EMA reading. Most people just think they're lagging, but for me it's the exact opposite. I like 9 EMAs. My favorite's the 13 EMA, but I don't trade it like this. I trade it when we converge, and that's sort of another topic we didn't get to today, but when those EMAs start converging with the retracements, that's really where it's at. All right, so there you go. That's the 9 EMA with Fibonacci. Fibonacci entries. This right here was a trade idea that we put out yesterday. We can do a little trade update, but we definitely want to be, well, not this one, right here. Long-term levels are key, especially when you're trading Fibonacci's. We had a trade idea out yesterday, and we hit that one perfect. 31.32 was sort of the low there, and we sort of traded down to 31.120. Still, though, a $12 range in this market's nothing, and we're up about $100 from that entry. That was a fantastic trade. If anybody got it, congratulations. These ranges are huge with gold, though, so you got to play a little bit. You got to give it a little bit more room, and then ask for more out of it. And I would say that that's going to be the key to your success trading gold right now. Interesting stuff. All right, everybody, we're going to be back tomorrow with a futures, Forex, and crypto trading Q&A. Bring your questions. Ask me anything you like. We can go over markets. We can go over psychology, really, whatever you'd like. But we're going to do the Q&A tomorrow at the same time. Let me see. A Trump visit would have moved oil prices. It did. It did. We saw some bearish price action last night in oil. Right now, we're off about 245. Remember, we had crude oil rollover, so we're not trading June futures anymore. We're trading July. But for your spot U.S. oil contract, you're now trading the July contract. So you should be reading about 61.14, 61.10 on your oil chart. If you're not, then you're on the wrong contract. That's good. Okay, everybody, I'm going to go ahead and sign off for today. I like it when the trades succeed. Fibonacci's take some time. You have to really watch the charts, and you have to build some of these things and get yourself into a position where you feel good about what the Fibbies really represent and how to trade them. Other than that, it just takes practice. And if you have any questions at all, be sure to head over to How to Trade. You can ask me there. You can also just check the video out. You can leave comments on the video too, if in fact you want your questions answered there. But as far as today goes, that's where we're at. That's a 9 EMA with Fibonacci entries. The biggest point of the whole thing is to make sure that you can flip your risk versus reward in your favor. That's what EMA trading is all about. Set up your stop loss, set up your profit targets, and then ride it out. Get the best entry you can, the best price you can, and ride them out. That's all I can say. Okay, guys, I've gone on way too long. Have a fantastic day. We'll be back here tomorrow with Q&A. So if you want to come on back, give me your market. Give me a market. We'll break it down. I'll break it down according to what I like to do. We'll cover the news of the day. And then also, if you have any psychology questions or anything you'd like to know, just be sure to reach out. Okay, everybody, let me see. Nefu, please, which pair is this? This right here is gold. That's gold. XAU USD. Spot gold. The others were futures contracts. All right, everybody. Thanks. You bet, Tuku. You bet. Okay, everybody, have a fantastic trading day. If you need anything, I'm at How to Trade. Trade the action well, and we'll talk soon. See ya.